Good afternoon, everyone. For those of you who don't know me, I am Lanisha Lightborn, the Business Development Manager for Asset Management and High Net Worth Services at the Bermuda Business Development Agency, also known as the BDA. The BDA is an independent public-private partnership, and our focus is on promoting the jurisdiction and encouraging economic development and inward direct investment. We have teamed up with Step Bermuda for a series of webinars that will continue throughout the year. Today, we have present one of the industry's subject matter experts to discuss art finance and why it is something that everyone should be looking into a lot more closely. Thank you again for joining us today. At this time, I will hand it over to the chairman of the Step Bermuda branch, Ashley Fife. Ash, you're on mute.
There you go. I was just talking very quietly. That's why you couldn't hear me. Many thanks again. We're very happy at Step Bermuda to be bringing you these presentations with the Bermuda Business Development Agency. We certainly have had some interesting talks in recent weeks and months, and today is no exception. We're very grateful for Freya Stewart, CEO of Art Finance and General Counsel at the Fine Arts Group, for taking the time to talk to us today about what art finance is, how it works, and developments in the sector. Freya has a very impressive background, having worked 10 years at Linklaters and Barclays Capital in the international finance sector, in a number of international financial centres, before joining Christie's as senior legal counsel, and then in 2015 joining the Fine Arts Group to launch its financing division. I'll just say a couple of things before we start. First of all, please use the question and Q&A function to ask questions rather than the chat function. And secondly, working from Bermuda, I think a lot of outsiders have a romantic vision that we spend a lot of time reclining in deck chairs on the beach, sipping cocktails in between conference calls. As an outsider to Freya's world, I have a romantic vision that Freya and her colleagues get to spend a lot of time walking to art galleries and private collections, sipping fine wine, and enjoying the works of Monet, Rembrandt, and Picasso. To tell you how true that is and much more, I'll hand it over to Freya.
Well, thank you very much, Ashley and Lanisha and Step and the BDA for very kindly inviting me to speak to you all, and thank you all for joining. There's lots of people on this webinar, which I'm really pleased to hear. So thank you for taking the time. I'm based here in London, and I will just talk you through a bit about the Fine Art Group, what we do, the art financing product, and throughout the presentation, I will give you of the current state of the art market. We've just had a big auction season in March, which has performed extremely well. So I'll give you a flavour for that as we progress. So a quick introduction to the Fine Art Group. Who are we and what do we do? The Fine Art Group was founded over 20 years ago by Philip Hoffman, who was at the time the chief executive of Christie's. And he launched the Fine Art Group as, at the time, what was the first art investment fund. And the Fine Art Group is very well known as an art investment fund group. But over the years, the group has expanded significantly to provide a holistic range of services to collectors globally, covering art advisory, art finance, agency, and art valuations. So the Fine Art Group provides the holistic services to collectors from the early days of their collecting all the way through the collecting cycle through to their divestment. We are headquartered in London, but we have many colleagues in the US, and we have colleagues covering particularly Switzerland and Hong Kong. So this is a global business. We're covering the top end of the art market. So most of our clients are really buying paintings, sort of the $1 million plus category of paintings, if you like. We look after clients, as I said, in all regions, really globally. Over 20 jurisdictions our clients are currently based in. We are a group of art professionals that occupy a really unique position within the art market. We have a team of experts, of in-house art experts, who are extremely well regarded and leaders in their field. Many are ex-Sotheby's and Christie's chairmans, heads of department, for example. So we have the in-house competency and expertise over a very long period of time to assess and to handle these kinds of high value artworks. Now, just moving on to briefly explain what we do in the finance sector. So the art financing business that I look after within the Fine Art Group, quite simply, is a real asset finance group. So we provide finance against art collateral. So to take a really simple example, and we've got two beautiful Picasso drawings here. Well, one's a drawing and one's a painting. We provide financing, for example, against a $10 million Picasso. We would lend $5 million initially for 1 or 2 years. So it's relatively short-term financing. And we would obviously charge interest, and typically we take possession of the painting in our storage facility, and we release that capital to our clients. What is the difference between us and a traditional lender? Of course, the banks, a number of banks use an art financing product themselves. Each bank does this differently, but the real difference between us as a specialty lender and a traditional bank is we are solely writing loans on the value of the artwork. So we are not underwriting our loans based on the net worth or the liquidity of our borrowers. So as I say, if you have a good painting, if your clients have a good painting, which is, it's a marketable painting from a leading artist, we will lend against it at 50% loan to value. And it's really extremely simple. There is no credit underwriting of the borrower. There are no financial covenants. And this allows the product to be a very distinct form of financing, meaning it doesn't interfere in any way with other financing structures that may be in place for a collector, for a trust. So it is a very discrete form of financing, which our clients find extremely helpful. So that's really the difference between us as a specialty lender. Art is our business, as I said, so we are able to really look at the value of a painting and lend solely against that value, as opposed to the net worth, the portfolio, or the AUM of a client at a bank, and that is the fundamental difference. The two paintings we have on this screen on the right-hand side, the top one is a Picasso work on paper that sold last week for 5 times the estimate, and it sold for £650,000, which for a work on paper is a great price. And the painting at the bottom there, which I'm afraid you can't see so well, but that is another Picasso that sold last week at Christie's for £15 million. Just to give you a bit of flavour of the art market today. A brief summary of the commercial terms of an art finance loan from us. I've touched on some of these already, but you will see here the loan terms, 50% loan to value, as I said, relatively short-term maturities originally. However, every loan that a client has asked us to extend the maturity on, we have done. So we have several loans in our portfolio that are sort of 3, 4, coming up for 5 years old. We don't do 15-year loans, for example. So it is, relatively short-term financing. The size of our loans, the minimum loan size is $1 million. There isn't really a maximum loan size. The biggest loan term sheet that I've had out recently was $200 million against a $400 million collection of art. That is, in this market, it is a big loan. And that is, we're still working on that. That's a very special, important collection of impressionist and modern artworks. Pricing, this is the question that everybody always wants to know. How much do these loans cost? What's the price? We charge between 6 and 8% per annum over LIBOR. Interest is charged quarterly. And typically these are bullet repayment loans. So there's just quarterly pay, and then principal is repaid at maturity. As I said, we do no borrower underwriting. We can extend finance to borrowers from virtually any jurisdiction. There are a few exceptions, but we work with many offshore clients. I've done lots of loans with clients, trusts and trustees offshore in Bermuda and other offshore jurisdictions as well. We have clients in, as I say, really every region from the US, offshore, Europe and Asia. We do take possession of the paintings into a warehouse. Now, as you may be aware, most high value paintings globally are actually stored in storage facilities anyway. So this actually doesn't present the roadblock that you might think it would. I'm sure many people here will be familiar with their clients and their principals holding collections in storage facilities in, for example, Geneva, Delaware. So we typically find that our clients actually are simply doing a ledger transfer of their paintings that are in storage to our storage account at the same facility or a close nearby facility. So that's the possession element there. The type of financing structures, the most common is just a straightforward term loan where we provide financing, as I said, for a year or two initially with bullet maturity. However, we do quite a bit of purchase financing. So this is where a collector is looking to acquire a painting and they would like us to provide 50% of the financing to make that acquisition. We're seeing a lot more of that. And that comes particularly with the type of collector who may identify certain pieces, certain paintings that they want to buy for an investment piece, for example. And they want to hold that piece quietly for a couple of years and sell it. So to give you a great example, we worked with a collector through an offshore structure a couple of years ago to buy a David Hockney painting as an investment piece, and the collector kept that piece very quiet for a couple of years, and they then sold it 2 years later and made a very significant return on their investment on that painting. The advanced consignment loans, these are loans where you have a client who may be looking to sell or is looking to sell a painting. But for these high value paintings, quite often the best sale opportunity for that painting may be 6 or 9 months in the future, or there may be payment terms that extend for some time, meaning they don't get the immediate liquidity that they're looking for. So we provide financing against paintings that have been offered, are being offered for sale at an auction, in the next 3 or 6 months, and we just provide 50% of the low auction estimate today to give them that immediate liquidity today, whilst the painting is being well handled and sold in the right sale, and a proper sale strategy is put in place to handle the sale of that painting rather than doing a fire sale. And those are the typical types of financing structures we work on. We do also do some drawdown mechanisms where client may want the facility for $8 million. They just want to draw $6 million to start off with. They're not sure if they need the extra $2 million, for example, and we can work with that structure as well. The type of collateral that we take, I will just move on a slide. I may need to ask, there we go. So the type of collateral that we work with, typically it is impressionist, modern and contemporary art that you would expect to see in a Sotheby's or Christie's or Phillips evening sale. So some names here that you'll be familiar with, of course, Picasso, Richter. Here we have a very interesting painting, Show Me the Monet. This is a Banksy painting. And then we have a painting here by Cause. Now, interestingly, I would lend against 3 of these paintings, but not all of them. And the one that I wouldn't lend against would be this Cause in the bottom right-hand corner. What we're looking for are paintings that have a auction or artists that have an auction track record that are liquid enough for us to be sure that in the worst case scenario, we are able to sell the painting and help recover the loan. It's very rare that that happens, but of course, any prudent lender needs to ensure that they are able to sell their collateral to recover a loan. Very similar to property financing. In fact, really, that's the closest analogy that I typically use. Art financing and property financing, you know, it's real asset financing. The only difference is paintings move and property doesn't move, and that does create an inherent additional complexity. So here we have a Picasso. Picasso is arguably the most liquid artist in the market, very prolific artist. We see a lot of Picassos being presented to us as collateral, and it's typically excellent collateral. An important feature, however, for all collateral is that it's in good condition. There may well be, and there have been, Picassos that we've been presented with, and they have not been stored correctly. They may have mold on them. The cracking might be too severe, or the conservation work that has been done on the painting hasn't been very good, and that has ultimately damaged the long-term marketability of that painting. So condition is one of the most important things. Once you've established that the painting is genuine and it's by an artist that we are comfortable lending against, the next question is the painting in good condition? I worked with a Monet last year, actually, and on the face of it, the Monet was worth $20 million, and we would have lent $10 million. But we went to inspect the painting, and very sadly, it really was in quite poor condition. And that resulted in us having to revalue the painting to $10 million and only being able to lend $5 million. And that is the kind of quantum of differential on value that can happen with the same painting in good condition or here we have a Richter. Richter is a fantastic type of artist for us to use as collateral. Basquiat, and we don't have a Basquiat painting here, but Basquiat and Richter make up currently some of the biggest proportions of collateral in our loan book, just to give you a feel of the type of paintings that we lend against. We also lend against jewellery, Jewelry and stones. So I have a beautiful 1937 Cartier necklace in my collateral pool currently. We lend against loose stones, typically diamonds, and that is something that we do. We don't lend against old master paintings. Of course, there's always an exception, but typically we won't lend against old master paintings, partly because the market for old master paintings is much more challenging. It is less liquid in our view. Of course, there's always exceptions, but generally we don't lend against old master paintings. You also have a much more complex picture of the provenance, the legal title, condition, and it's altogether quite a challenging segment of the art market to lend against. We also don't lend against fine wine or cars. You know, our expertise is high value fine art, and that's what we stick to lending against. Why do people borrow? You know, if you have a collector, you know, who has $100 million art collection, why do they want to borrow money from you? Well, borrow from us is simply the release of valuable capital from their collection to invest in other investment opportunities. Often it is buying more art, but also very often it is simply investment opportunities. It may be real estate, it may be investing in their own companies. And this is quite an interesting dimension to our business, which is the principles behind a lot of our collections are very successful entrepreneurs, and they use the financing that they've released from their art collections to invest in their own businesses. We saw at the beginning of this year, and we see it periodically, clients who are equity investors who have margin calls on their equity portfolios, and they're looking for some relatively fast liquidity across their asset base to make those margin calls. And we see people, we've seen many clients coming to us historically to release some quick capital from their collections to do that. And we saw that at the beginning of the pandemic as well. Quite often you will see clients who want to maintain what I would call asset segregation. So they don't want to, there are other portfolios to support the growth of their art portfolio. They want that its own 2 feet, and to use their current collection to raise capital to acquire the collection. So that, and of course, trust. We do a lot of work with trusts and trustees and other structures, and often it is to provide financing to pay legal bills, actually, to provide liquidity, to provide for general trust costs, and that's fairly common as well. Unfortunately, sometimes just family reorganizations, family disputes, you may find that there's not an agreement amongst the trustees or the beneficiaries as to how to handle, how to sell part or all of a collection. But in the meantime, there's a beneficiary that really wants some liquidity. So the beneficiaries will agree amongst themselves that in the interim, whilst they work out what they want to do with the collection and how they want to manage the collection going forward, we will provide some financing in the interim to provide a particular beneficiary sometimes with that liquidity. And that gives everybody some breathing room to make the right decision, hopefully. just coming on to the process, how difficult is this? How long does it take? If our collectors, which ultimately they do have, if collectors have good paintings, if a trust has a fantastic collection, it's actually very easy. What we do initially is we just do a desktop valuation where we just look at a PDF and good images of the paintings, and we provide a valuation and a term sheet, typically really quickly within a couple of days, to give a sense of, can we do this loan? How much can we lend? And if there is a meeting of the minds there, we produce a term sheet. And once we've agreed the term sheet, we then move on to essentially diligencing, full diligence on the painting. We view the painting, and we need the title paperwork, which may be obviously transferring the title from the principal into a structure, or it may simply be a purchase invoice. So just the title documentation, any import or export documentation that's relevant for the paintings. And as I say, we do a condition check of the painting before we lend against it. We also arrange the logistics. So if a painting does need to move from one location to another, we arrange that for the client. And we arrange the insurance. Many collections, of course, are already insured, and that's fine. We're just added as a beneficiary to the insurance policy. Or we provide the insurance policy for the clients. Quite often, our insurance policy is actually a lot more competitive, and most of our clients use our insurance policy during the course of the loan because it's cheaper. So essentially, the execution process is pretty straightforward for people who have worked on these loans before. Hopefully, they will agree. The documentation, the legal documentation. I know I'm sure there's lots of lawyers here listening, and this is a relatively straightforward loan agreement. This is not a 200-page syndicated LMA style document. It is a user-friendly 20-page, maximum kind of 20-page loan agreement. And it's designed to be read and understood by our principals, by our collectors. And it's not a huge headache. I'll just touch on jurisdiction in terms of what jurisdiction do we document these loans under. Many of our loans are multi-jurisdictional. To give you a good example, the last loan that I did with a Bermuda structure, that involved 4, possibly 5 jurisdictions. We had paintings moving from Norway, Switzerland to London. So you have jurisdictions involved in the location of the painting, which is where we take security. And the security interest is, of course, governed by the location of the painting. And then our loan agreement is an English law loan agreement. So we have that jurisdiction, and then of course there's the jurisdiction of the borrower. So typically our loans are at least 2 or 3, sometimes 5 jurisdictions, and that's really easy for us to handle. Thankfully, I'm a lawyer myself, and albeit an English lawyer, so obviously I don't cover all jurisdictions, but we handle the legal work ourselves internally, and working with people like Kerry Olsen and Ashley on our transactions. I've really talked about some of these case studies, so I will leave these on the screen as I just move on to the next topic. But these will be available for you to look at and ask any questions on. Current themes sorry. Let me just take a slide back. Current themes in the art market that affect the art finance business, and what does the year ahead look like? Obviously for everybody, the last year was quite a challenging year, but I'm pleased to say the art market stood up very well. There was a period of illiquidity in March and April, in particular March, April, May. And the auction houses, Sotheby's and Christie's and Phillips, responded extremely well to the challenge that was before them. And the liquidity in the art market really came back. So for me as a lender, I very quickly had the confidence that the liquidity was there in the art market, which is essential to all of our clients and to us. And of course, the nature of the art market changed last year in many very interesting and progressive ways. People were buying online a lot more. The value of paintings that were being bought online increased hugely. But it also provided a wider access to buying paintings whilst people were buying online. The other aspect from last year was the physical viewing of paintings, of course, became more challenging, and air freight really stopped for a period of time. So we had paintings, we were sort of mid-executing loans, and we had paintings that needed to move from Europe to the States, and there was no freight for really for 2 months. All of those kind of logistical issues actually resolved themselves very quickly in a matter of months. And I'm pleased to say that really all logistics are working extremely well now within the art market again. The other challenges that we faced last year, well, Brexit. Brexit actually for art finance hasn't had a huge impact. What it has done, though, is for our business, we opened a facility in Ireland, so that paintings that would perhaps previously have moved from continental Europe, from within the customs union, to London for us to hold in London during the course of the loan. Of course, now post-Brexit, that's not necessarily a viable option from a tax perspective. So incurring unnecessary import duties and changing the tax status of the work, which is what we always look to avoid. So we opened a facility in Ireland, and we now take collateral in Ireland as well. So that was an additional change for us. AML, of course, has been lots of commentary about the application of the anti-money laundering regulations applying to the art market, which they now do, which is fantastic. And that really hasn't impacted our business. On the financing side, we have been subject to the same anti-money laundering regulations as really as a bank for many years. So there's no real difference there. I think what it has done to the art market, or what it will do over time, is increase confidence proprietary of the art market, and the sometimes negative commentary that is produced around the anti-money laundering in the art market will diminish, and I think it has done already. So I think the application of the European Directive anti-money laundering regulations to the art market is a very positive move. And of course, in the States, this is something that is slightly is slightly behind us in Europe, but it is nonetheless in the progress. I think in terms of the wrap up there, what I really wanted to convey was that we provide the art financing product to a very wide range of clients globally, against a very wide range of collateral: impressionist, contemporary, modern paintings. and we're an extremely competitive finance provider. There are relatively few finance providers with this kind of in-house competency. So I think we are very uniquely placed in that regard. So thank you very much to everybody for watching, for listening, and to my hosts. And I will hand over to any questions.
Okay. Many thanks, Fred. That was very interesting and presentation. One of the questions that came up was in terms of jurisdictions in which to hold the art as security, are there any particular preferences or jurisdictions that you might consider unfavorable?
Yeah, so we take possession of the paintings, the custody of the paintings that we're lending against is, those jurisdictions are the US, multiple states within the US. So for example, we have paintings today in California, Delaware, Texas, New York, New Jersey. Europe, the sort of European hub for storing paintings that we take possession in is Switzerland. So we have paintings in Geneva and Zurich and London and Ireland. And in Asia, we take possession of paintings in storage facilities in Hong Kong and in Singapore. And I should actually add that we also lend against paintings that are in museums. So we have over the years had many paintings that have gone on exhibition to, for example, the Met in New York, or the National Gallery here in London. So that's not uncommon, and we work with our collectors to do that. You know, most of our collectors are very well-informed collectors, and often they want their paintings to be exhibited in an important institution, and we can facilitate that.
Do you also lend against contemporary works like sculptures, for example? Oh.
Yeah. So in terms of the contemporary works that we lend against, the slide where I had some drawings there, or some paintings. I don't know if I have the slide control now, but the paintings, for example, Picasso, a modern artist, versus Banksy and Cause. So on one of the slides there, we had some Banksy and some Cause. Now, we wouldn't lend against Cause because, in our view, that is an artist which has recently really come to market, and it doesn't have the depth of market that we feel comfortable lending against. The kind of artists that are not regularly represented at an evening sale at Sotheby's and Christie's, which of course many contemporary artists, very contemporary artists aren't, then it wouldn't be suitable collateral. But Banksy, for example, I have Banksy in my portfolio. We lend against Banksy paintings. This Banksy painting here on this slide, for those of you that are not familiar with this sold last week here in London for an incredible record price of, I believe, yeah, just checking, 24 million pounds or dollars, and all those proceeds went to the NHS. Would I lend 50% of that sale price? No, definitely not. So when we think about valuing works, and this is, you know, perhaps even more relevant for very contemporary artists, you know, the purchase price isn't necessarily going to be the resale price. We have to price our collateral for loans at the low auction estimate. So to take this example on the right, this is a Damien Hirst, a contemporary artist. This is a spot painting. This one sold last week as well. This is a relatively small example, but I have in my collection, in my portfolio, a much bigger example of this, a very good example of this. We have a collateral value of I believe around $1 million on it. So you can see there are living contemporary artists, and many people think that perhaps we wouldn't lend against that kind of artwork, those living artists. And yes, we are very selective about the type of artists that we can lend against, but those are examples where we can.
I appreciate that you're acting for the lender, but in terms of trustees, do you have any observations about issues that you think, from your perspective, trustees might take into account when considering art financing?
Yeah, I think the first thing is obviously thinking about what is the purpose of the loan, and does the loan, is it flexible enough to work for whatever the requirement is? What is the liquidity requirement? And making sure that, for example, a good example is we actually can swap paintings in and out. So let's say the trustees have a collection of maybe it's 3 or 4 pieces of jewelry, and it's a collection of paintings, and we select on the initial loan a piece of jewelry and 2 paintings. And it may be that over time the principal wants to sell one of those paintings, but they still want the financing. If we were providing the financing, then we can provide the flexibility to swap paintings in and out, or to swap a piece of jewelry in and out. That's something that you should consider is what is the plan for these paintings? Does our client actually, does our principal want to sell these paintings in the next 6 months, in the next 2 years? And making sure that those discussions about what the plan for the paintings are have really been discussed with the lender, and making sure you have the right terms and the right flexibility to handle that.
Most of the loans shorter terms, a couple of years, as opposed to 10, 15, 20?
Yes, definitely. We provide short-term loans. There are, I don't believe anyone provides long-term financing against paintings. The longest loans really in our loan book, as I say, people can extend their loans from their initial maturity. So we have a number of years, 3-4 year loans in our book currently. But no, sort of a 10-year loan is not the kind of product that this is. Yeah. And
in circumstances where the value of the painting drops dramatically for some reason, and what sort of considerations and steps would you take as lender?
Yeah, very good question. Of course, one that the Borrowers' Council and the trustees should be asking. So we have the ability to revalue the collateral annually. And again, this is fairly market standard. This isn't just us. And in fact, some banks, in fact, I would say most banks actually have much more flexibility to revalue really whenever they want. We don't do that. We have a revaluation point every anniversary, so every year. It's pretty rare for us to use that. And of course, a great example is what happened last year on this. The ultimate kind of black swan event in every market, most markets, is the same in the art market. So it's a really good test case to this question is, what happened? What did you do? Did you suddenly slash everybody's collateral values, apply, some people ask me, did you just apply a 50% haircut to all your collateral values and call in 50% of your, your principal loan amount? Well, no, that's not what we did. What we did was, of course, there were certain artists, which, to be honest, wasn't really necessarily a function of the pandemic at all, but certain artists just hadn't performed very well in the previous year. And there were literally about 5 paintings where we took down the collateral value by 20%. So yes, there is that protection in there, but it's one very good reason why we also start from the premise of a low auction estimate. We don't start from a high valuation point, because we know that our clients hate that. Clients want certainty of capital. And one of the best ways to ensure that is to be conservative at the get-go with your collateral valuations. And you're not then at the limit when you start, and you've built in some buffer there. And that is an important point as well.
That sounds in both parties' interests. And I think a lot of trustees would be relieved by you saying that. So aside from, you've mentioned difficulty in screening, viewing paintings during COVID, and perhaps some changes in the marketability of paintings. Are there any other, perhaps attributable to COVID, are there any other impacts of COVID on this market, and other developments that you consider might arise going forward in these times?
Well, I think that there is a real positive, which is that, as I touched on briefly, the ability to reach a wider audience through the normalization of transacting online and transacting remotely, that much greater adoption of the online format, which was already in play in the art market, for the last 7-8 years, perhaps, you've been able to bid, at an evening sale at Sotheby's and Christie's or Phillips. You've been able to bid online for many years. But there was a real threshold of value that people were, or appeared to be, comfortable bidding in that online format. And that threshold of value really increased over the pandemic. And I think that's probably here to stay. The reliance on condition reports, if you haven't been able to physically view an artwork, then, as I said, you really need to make sure that you've got a painting that's in good condition, because it has such a huge impact on value. Now, traditionally, a lot of paintings, obviously, a collector would have their art advisor, which quite often was, for example, my colleagues, in the fine art group. They would go and inspect a painting, do a condition report, and really appraise the painting on that basis before a client bid. That was much more challenging. So what we saw was the use of third-party condition reports. So, when we couldn't go and view a painting ourselves, we appointed a local leading conservator for that type of painting to go and inspect for us. So there was a bit of a change in the market there in terms of how do we physically condition check paintings. I think the other themes that have come across is the regional strength of markets that we've seen. The 3 art markets regionally in the world are, as you would expect, the US, London, and Hong Kong. Well, not just Hong Kong, but Hong Kong and China. So those 3 regions, and we've seen some incredibly strong sales in Hong Kong over the last year. And in fact, I'll just see if I can bring up this Basquiat painting. which is a very interesting example of, nope, I'm afraid I can't move the slide. But there was a world record price paid for a Basquiat painting that was bought in a Hong Kong sale, and the record set was for the highest value Western painting bought in a Hong Kong sale, and that was a beautiful Basquiat for let's see if I can find it. No, I can't. Yeah, so you've seen some strong regional variations there. Yeah, here we go. Thank you very much. The Basquiat here in the bottom left-hand corner. That sold for I believe $35 million or thereabouts in Hong Kong just a couple of weeks ago.
And so in the event of a default, what's broadly the process that you go through? Yeah,
so the first thing I'd say is, in this, the way that we work with our clients, which is, these are clearly high value, high net worth clients, ultimately, whether it's a trust or the principal behind the trust. We apply a very white glove service to our clients. We're very close to our clients, and there really isn't a jump to default. It just doesn't exist. We speak to our clients weekly, monthly, whatever's appropriate, and these are people that we know well over time, if we don't already know them at the beginning. And so there isn't this kind of jump to default where it's a surprise and you have that uncomfortable conversation with your client, because it just doesn't really happen like that. But in the event that ultimately you do get to a default, let's say it's a payment default, it's the most common default, and you've run out of grace periods, and we have to come up with a plan. Typically, obviously, we try and agree that plan with the client, think about which paintings to sell first, which and kind of create a strategy around that, because often you'll have an option within the collection, and it may be that you just need to remediate something short term. You don't accelerate the whole loan and sell the whole collection. You may just, the collector or the trust, they just may need some time to because they may have a liquidity in the rest of their portfolio, and that does happen. And if it's really delayed, we might come to an agreement to sell one painting. Let's say I've lent against 20 paintings in a collection, sell one painting, we agree which one that is, and we remediate that, and everybody's happy. In the worst case, when this is extremely rare, where the client doesn't agree, if you like, to the remediation plan, and the restructure, we'll typically restructure a loan, we'll extend a loan by a year, create some mechanisms to allow them to work out the loan. But as I say, if we can't get there, or the remediation plan doesn't work, then yes, the lender has the right to sell the paintings. And this is actually another reason why some clients use us specifically as a lender, as opposed to a bank lender, even though we may be more expensive. We probably are more expensive if you're the type of collector that can access a loan from one of the banks, because we know how to handle the sale of these paintings. And these paintings require a great deal of expertise to sell well. We don't just put something in an auction and hope it's going to sell. That strategy is not a good strategy. The marketing plans, the placing of paintings, the whole strategy around selling high value paintings is a skilled profession. And I've had a client that moved a loan from a traditional bank to us because they were worried that they actually may default in time. And if they did, they wanted us to handle the sale of the paintings, not the bank. And that was fine. And that's what we did. And over time, he did need to sell the paintings. It wasn't a technical default, but he knew that actually he needed to sell some of the paintings, and he'd rather it was us doing it than the bank.
Well, that's certainly many good reasons for choosing a specialist lender in this field. Yeah. I think that addresses all the questions, and I know that initially, well, actually, I just have one more question. How did you move into this space?
Yes, interesting. Yes, I obviously, as you kindly said, I started off life at Barclays and Linklaters as a structured finance derivatives lawyer. I became aware through a family friend that there was such a thing as general counsel of Sotheby's, and that piqued my interest. And I did a conversion course into some art law. I did an art law diploma, and I was very fortunate. And I sought out the general counsel of Christie's, and they'd never hired a finance lawyer, yet they were doing a lot of financing activities. And the art market, you know, has become a much more sophisticated market with more complex transactions, with a lot more financing structures involved. And so as a finance lawyer, that skill set, which hadn't really come into the art market before, I was fortunate enough that that there was a role for me there as a finance lawyer within the art market. And this is how I ultimately came to the Fine Art Group, because the Fine Art Group is a very big client of Christie's. And that was my transition.
Brilliant. Well, it sounds like you're enjoying it. And thanks again. We've had some great feedback already coming in for your presentation today. So it certainly has been appreciated, not just by myself and Business Bermuda Development Agency, but also the attendees. So well done. And
well, thank you very much.
It's a pleasure. Hope to see you soon. I'll just close by just outlining some of the presentations coming up with Step Bermuda, and also Bolt is involved in with some presentations, supporting some presentations. On 30 April, Friday, 3:30 to 5 p.m. we've got Advanced Trust Planning for US Chinese High Net Worth Investors with Carlin McCaffrey and Shudian Zhou of Norton Rose Fulbright. 6 May, we've got a Trust Estate Practitioner Information Designation session with continuing legal training that Alex Whitaker, the Vice Chair, is putting together. 13 May, advantages of using offshore trusts from an investment perspective. Chris Opie and his team at Alliance Bernstein. 20 May, AML considerations for trust businesses with Michael Wynn and Melanie Fulton of Walkers. 10 June, this is the last one, I promise, for now. Practical strategies for US connected trust with Giev Askari, Senior Wealth Planner at HSBC Miami. So we've got lots of great talks to come. And Freya, again, thank you so much for sharing your knowledge and experience with us today. And stay safe and take care. And thanks everyone for tuning in.
My pleasure. Thank you very much.